So, one of the biggest players in the crypto game is making a $1 billion bet. And it seems to defy all logic. Binance is moving its entire user safety fund into Bitcoin. In this explainer, we're going to unpack exactly why they're trading stability for volatility and what it all means for their millions of users.
I mean, this is a move that when you first hear it, sounds completely backwards, right? A safety fund is supposed to be the most stable, most predictable thing you have, your rock in an emergency. So why on earth would you deliberately swap that safety for one of the most volatile assets on the planet?
And let's really let that number sink in for a second. We're not talking about some small experimental investment here. This is a $1 billion commitment, a massive financial decision that has huge implications for the entire platform and, of course, its millions of users. So yeah, this creates what you could call a $1 billion paradox. It's a move that seems to directly contradict the very purpose of an emergency fund. But as we're about to see, there's actually a very deliberate strategy behind this seemingly wild decision. Okay, so here's the headline. Binance, a true giant in the crypto world, has announced it's converting its entire user protection fund, the SAFU fund, from stablecoins directly into Bitcoin. This is a fundamental change in how they manage their most critical safety net. But before we get into why they're doing this, we gotta understand what we're even talking about. So what exactly is this SAFU fund? SAFU, it actually stands for a secure asset fund for users. Think of it like an insurance policy, but for your crypto. It was created to protect users from worst-case scenarios, like a massive platform hack that could lead to customer losses. Its entire reason for being is to be a reliable, stable safety net.
And to get a sense of why this safety net is so ridiculously important, just look at this number. As of early 2025, Binance was holding something like $163 billion worth of user assets. When you're the guardian of that much money, a $1 billion insurance fund isn't just a nice to have, it is absolutely essential.
All right, to really get why this is such a big deal, we need to talk about the assets themselves. Understanding the fundamental difference between what the fund used to hold and what it's moving to is really the key to this whole story. So on one side, you've got stablecoins. The name kind of says it all, right? They're designed for stability, usually pegged one-to-one with something like the US dollar. And then on the other side, you have Bitcoin, famous for its wild price swings, but also seen by a lot of people as a long-term store of value, like digital gold. Binance is choosing to trade that predictable stability for volatile potential. Now, this brings up the most obvious question, the one you're probably thinking right now. What happens if Bitcoin's price just crashes? A safety fund that can lose a huge chunk of its value overnight isn't much of a safety fund. Well, it turns out Binance has a plan for that. And let's be super clear here. This is the big, flashing red light risk. Bitcoin's price can be all over the place. If it plummets, the value of this $1 billion fund could shrink, and fast, potentially at the exact moment it's needed the most.
So what's their answer to that risk? Well, here's how they plan to handle it. Binance has made a public promise that if the fund's value ever dips below $800 million because of price swings, the exchange itself will step in and top it right back up to the full billion. It's like a built-in circuit breaker to handle that volatility.
Okay, so we've covered the what and the how. Now it's time for the big one. Why? What's the strategic thinking behind putting so much faith and so much money into Bitcoin? So the official line from Binance is pretty corporate, right? They say it's all about their long-term industry building efforts. But what does that actually mean when you translate it from corporate speak? But when you really break that down, what are they actually saying? Well, it sends a few really powerful signals. First, it's a massive vote of confidence in Bitcoin, basically saying they see it as the ultimate reserve asset for the crypto world. Second, it makes the fund more transparent because anyone can go look at the Bitcoin wallet on the public blockchain. And third, you could see it as an attempt to set a new industry standard for how exchanges should protect their users. Now, this isn't some overnight flip of a switch. The plan is to do this gradually, moving the assets over about 30 days to avoid causing any major market ripples. And on top of that, they've also promised to do regular audits, which adds another layer of trust to the whole process. And all of this leaves us with a big, lingering question. Is Binance creating a new gold standard for the crypto industry, trying to position Bitcoin as the ultimate financial backstop for the whole ecosystem? Or is this just a really high-stakes gamble that's more about making a statement than it is about quiet, predictable stability? For now, I guess only time will tell.